The second thing that I want to talk about is institutions. So when I first entered the space in 2017, I came from Fidelity. And at the time, the conversation was, okay, when are the institutions going to enter blockchain and really make this a more legitimate space? And this conversation has been happening for the past 7 years. But if you look at the market today, I don't think there's an institution that would say crypto is going away. In fact, this year, we saw one of the largest financial institutions, BlackRock, partner with a company, Securitize, one of our portfolio companies, to tokenize their own fund called BIDL. And if you look at this trend, RWA stands for real world assets. Real world assets is any sort of asset that you can tokenize on chain. Regardless of the numbers on this graph, it's up and to the right. And I think what we're seeing is a shift from theory to actual live production on the institutional side. And then the last data point that I want to talk about is DeFi. And I'm not really going to talk about DeFi as a sector, but what I want to point out is when DeFi was first starting out in 2018, or you can sort of decide what date that would be, it was an experiment. We were rebuilding the financial infrastructure from the ground up. But now, 5 or 6 years later, DeFi has withstood a number of major shocks to its system, whether that's COVID, the regional banking crisis in the US, or even our own crypto cycle with FTX and other players. And through it all, DeFi continued to work, and we are seeing players like Aave and Uniswap prove to be resilient and prove that the technology works. And this is...
What is going on, everybody? Welcome back to another quick CYPRX video breakdown. As you all heard in that quick intro, DeFi works. Institutions are in the process of onboarding and adopting these DeFi solutions. Not only are they going to be utilizing themselves, but they are going to provide them to their institutional clients. And the DeFi ecosystems on blockchains and these DLTs, for example, like the XRPL or Stellar or Hedera, are only going to continue to significantly increase in terms of TVL as time progresses, and a lot of people are not paying attention to that. So in today's video breakdown, I just thought that I'd hop on here during this weekend pump and enlighten you all on one of the many reasons why digital assets such as XRP, XLM, and HBAR, and Algo, we'll get into a little bit of Algo today as well, are significantly higher in terms of price, as we've seen the DeFi ecosystems across these three networks scale significantly over the past consecutive couple of weeks. And so I want to break down some of those developments, show you guys that here in the CYPRX Wealth 28 Club, we've been attempting to show you all that this was going to happen. We've been projecting this. This is nothing new. I know that a lot of other people on the internet are freaking out about prices. They're like, oh my gosh, this is happening out of nowhere. What's going on? But this is all stuff that can be easily tracked and digested in a fundamental and sound technical way by understanding what increased TVL on DeFi platforms does for the native digital assets. For example, XRPL, DeFi activity increases, so will the price of XRP increase. Same thing with Stellar, same thing with Hedera. And that has happened, okay? And I'm going to show you guys that in today's video breakdown. So make sure that you stick around, especially if you hold any of these digital assets. And if you guys don't know about DeFi and you want to learn more, head over to CYPRXtrading.com. We'd love to have you on the team. Again, you guys can utilize the holiday discount codes to get 20% off your first monthly subscription in the Wealth 28 Club right now. So I said to you guys here, after playing this video clip, which I posted on November 27th, 2024, a lot of the dates in these posts are going to be something that you are going to want to pay attention to. We said they are building a brand new infrastructure. Institutional money is coming. DeFi has matured and it is not going away. XRP, XLM, I'll throw in HBAR and Algo, had no DeFi ecosystem previous crypto cycles. DeFi alone is about to scale these two assets to new all-time highs. Watch how well this ages. So let's just look at the current market sentiment. We can see here, this was posted by the Blockchain Media. Utility coins have been top earners in the past 30 days. You can see here they talk about XLM, Algo, HBAR, XRP, ADA, right? Interesting. Well, let's take a look at the DeFi developments because, again, we have individual participants in this space, retail traders that are lost in the sauce. They don't really understand the dynamics behind the digital assets in which they invest in. They just think some magical fairy waves their wand out there, I guess, and that these prices go higher. These higher prices are driven by metrics. They're driven by increased TVL. They're driven by increased trading activity, a whole bunch of different metrics, fundamentals that create a risk on market sentiment. And we attempt to cover those here for you guys at CYPRX. So again, today we're going to fixate our attention on answering these questions and focus on DeFi developments across all three of these different networks. So here you can see an individual saying, does anyone know why XRP is pumping? This again just confirms my theory that not a lot of people understand DeFi, especially when it comes to utility-driven assets, considering that these utility-driven assets have not really had well-built DeFi ecosystems or even an infrastructure for DeFi on their ecosystems over the past consecutive couple of years. For example, the AMM feature on the XRPL that released this year in March opened the door for DeFi. And then also the EVM sidechain feature that is being built out right now on the XRPL, presented by PeerSys, is all allowing this DeFi ecosystem to really come into fruition this year. All right. And this is all happening for the first time. A lot of this stuff, a lot of the developments in DeFi that we're seeing, the increased TVL, the growth in the DeFi ecosystem, the dApps that are happening on chain on these networks, it's all happening for the first time. So this is new to a lot of individuals, which is again why we created the Wealth 28 Club to humble people and to let them realize the opportunity at hand that we now have as utility investors to take digital assets that we've never been able to deploy in the DeFi ecosystem for the first time ever, to go out and do so by lending, borrowing, providing liquidity with these assets, farming with these assets, all things that were available to networks like Ethereum, okay, blockchains like Ethereum, that were never available on the XRPL before or on Stellar before. Like I said, right, relatively new to the DeFi ecosystem if you hold utility assets. So I said to you guys here, remember, and I want to really prove everything to you guys, what it is that I'm saying. We have an individual representative on stage from Chainlink who goes on to talk about how DeFi brought utility to ETH, right? So I said here in this post, remember, DeFi brought utility to ETH. Notice how utility coins like XRP, XLM, Algo, HBAR are all performing well this month. Have you looked at their DeFi developments? They have all been cooking in the DeFi realm of things. Now, with each of these assets, we are starting to see lending, we're starting to see borrowing, we're starting to see staking, and we're also starting to see liquidity providing services for each of these assets. And we warned you guys about this months ago. Take a second here and listen to what this individual rep says about how DeFi brought utility to ETH.
Actually, years ago, DeFi actually brought utility to ETH, right? Now, if you're holding ETH, you can lend it, you can borrow, you can stake, you can do so many things years ago. DeFi actually brought utility to ETH, right? Now, if you're holding ETH, you can lend it, you can borrow, you can stake, you can do so many things.
Right? DeFi brought utility to ETH, and we're seeing right now what's taking place. The utility coins are the top performers. In my personal opinion, one of the many reasons is because of the DeFi developments that we've seen on each of these ecosystems over the past 2 months. It's been insane. And we warned you guys about this. This is a post, like I said, we're going to be paying attention to some of the dates. Myself and Aquaman, we told you guys back on July 15th, 2024. That's when I posted this. Last bull market cycle. XRP, XLM, HBAR, I can throw in Algo in here, I can throw in XDC in here, had no DeFi ecosystem helping boost momentum like ETH did, right? That has all changed for the first time ever. You've seen nothing but DeFi developments on the XRPL, Stellar, and Hedera. Buckle up. This ride will be different, utility bull run or not. The DeFi ecosystems alone on these three networks are about to explode in TVL over the next 8 to 12 months. And now look at where we're at. We're at the end of the year. Okay, I said this back to you guys mid-year, July 15, 2024, and look at what has happened. This tweet, this post is aging so well. The TVL on these three networks has increased significantly. So let me show you guys. Saucer Swap Labs just posted out. This is from November 23rd, 2024. New weekly volume record. Saucer Swap Labs, by the way, if you guys don't know what Saucer Swap is, it's a DEX where you guys can go and you can provide liquidity. There's all kinds of things. I'm not going to get into that in detail, but it is a DEX built on Hedera, okay? A decentralized exchange. Saucer Swap has processed over 132 million in trading volume this week alone, and the weekly candle has not even closed. For the perspective, we've executed more than 400,000 trades on the Hedera network this week, averaging nearly 1 per second. Okay. Again, I'm showing you all physical proof that back in July, we were trying to tell you all why these digital assets were about to go parabolic. Okay. And it is specifically, again, there's many reasons, but specifically fixating our attention on DeFi TVL increasing across these three networks and many others that never had DeFi in previous market cycles. That is all changing. That's why you're seeing people, if you just go look, you can confirm this yourself. Go look at the monthly charts on XRP, XLM, Algo, HBAR. The monthly candlesticks are massive. Some of the biggest monthly candlesticks that we've seen in history. And it is because of the TVL increasing on these networks. Okay. Institutional adoption is coming. DeFi is going to be utilized by institutions and regulators in the future moving forward, whether you like it or not, which is, again, why you should get educated. We've been attempting to push for people's education because so many people don't understand that this is happening. You are, if you're in DeFi, in crypto, part of the 1% of the 1%. So here you can see H liquidity, again, talking about Hedera. What did they post out? November 22nd, 2024, all updated info. Breaking Hedera. DeFi trading volume reaches Hedera record breaking $2 billion US. That's massive and monumental. I posted these two video clips to you guys. One of the head of developer relations for Hedera confirms major optimism for the futures ahead. What is he talking about in this little tiny post on the Twitter space that, again, not a lot of people tapped into? Same thing that we've been stressing to you guys all to pay attention to. He was talking about DeFi. He was talking about yield aggregation. He was talking about ESG, institutional access to DeFi, transaction per second upgrades. Okay, take a second here and listen to what he says.
Opportunity in that field, and then this track aligns pretty well with this broad market interest and this market opportunity that we're seeing. We also know that Web3 and blockchain are a great way to bring the financial system into the 21st century. I think I've said that like 100 times in the spaces that I've been with you guys, but I truly believe that. And so we have this track for DeFi, right, for decentralized finance to explore maybe yield aggregation, to explore more lending and borrowing, to explore maybe new insurance models, things that may take advantage of, you know, what blockchain can enable in this sector. And then we have, you know, I don't want to give you too much detail here, but we also have tracks for green finance.
So I'll pause it right there, but he mentions lending, borrowing, yield aggregation, DeFi, right? And do you guys remember, to relate back to this post again, where the individual representative, let me share my screen, on stage just recently at an event that Chainlink hosted, what did he say? DeFi brought utility to ETH. This is very simple metrics to understand. And we've seen now, I just showed you guys, increased DeFi activity on Hedera. So of course the price is going to significantly increase. To answer this individual's question, you know, why are utility assets pumping? It is not, it has nothing to do with their utility yet. People, that's the key word right here. We're not in some utility bull market cycle yet. That has not come yet. It will. But right now, we are seeing significant increases across the board in these utility assets because of the increase in DeFi activity. That is, again, one of the primary reasons. And I'm going to physically continue to show you guys that. So that was the head of developer relationships at Hedera. Now we can go over here and we can see another lead individual from the HBAR Foundation. This is Greg Bell. Greg Bell from the HBAR Foundation confirms growing institutional interest in DeFi and that it's a game changer. I just posted this to you guys today. Many in crypto are still underestimating its scale. DeFi solutions like lending, borrowing, staking, and liquidity provisions will soon be the standard for regulated financial institutions. Retail investors don't understand the potential now. They may miss out. As they roll out these services for financial institutional clients, the wave of capital flooding into DeFi will be massive. Like I said, retail investors who don't understand the potential now of DeFi and how you can utilize it to scale and grow your wealth, right? You're going to miss out on a massive opportunity to capitalize on HBAR at today's prices. This is not speculation, people. Do you understand that once these institutions come in, which they are, and I'm going to show you guys that again, that these reputable individuals from Hedera, from the HBAR Foundation, they're the ones telling you guys that institutions are coming. Wake up and start doing research on what the largest institutions are doing. They are fixated on DeFi. They're fixated on lending, borrowing, staking, providing liquidity, right? Being yield aggregators for these, like, and we all right now have equal access to the same things in this new financial system that these financial institutions have access to, right? We'll get into a platform today called Block Demon, where I showed you guys reputable individuals on stage once we start talking about Stellar, openly admitting that financial institutions are utilizing their products. And on Block Demon, institutions can go in and they can stake, they can get access to staking services, and they can earn on their Stellar, right? And I showed you guys how on an Exodus wallet, we have equal access to the same staking rewards, and we can earn higher yields than institutions right now as retail investors, which has happened for the first time ever, that institutions can get higher, or retail traders can get higher yields than institutions. That is mind-boggling for anybody that understands the power of that, and that is happening now for the first time ever in history. Okay, so let's play this little video clip from Greg Bell, the HBAR Foundation. Just listen to what he says. Don't take it from me. If you hold HBAR, again, this is coming from a reputable individual at the HBAR Foundation. Listen to what he says. And when I played this video clip a couple of weeks ago, it has barely 500 views. Nobody's paying attention to this type of stuff. So take a second here and listen to what he says.
Let's go ahead. Let's start directly with DeFi on Hedera. So Greg, could you start by giving us an overview of the DeFi ecosystem on Hedera? What makes Hedera an ideal platform for DeFi projects in your mind?
Well, thanks for having me to begin. And DeFi is really fun. It's fascinating. It has both individual and institutional interests. And I'm really excited to be here with Joseph with his DEX experience. I know later on we'll touch on some of the institutional side where products from some of the world's largest asset managers are being tokenized. But I think really it's helpful to start with the question of understanding why. Why Hedera? Why DeFi? As I'm sure your users and viewers will recall, Hedera, powered by its cryptocurrency HBAR, has been independently verified as the most used open source public network in terms of total transaction count. So it's about 20x that of Ethereum. It's the fastest in terms of realized peak and average transactions per second at a low cost, which is really important for DeFi apps, and that, especially those that require high throughput and low fees. It's also quite developer friendly, with programmability in a variety of different languages from Java, JavaScript, C++, and Solidity. So usually it doesn't require a developer to learn a new programming language to enter the ecosystem. And I think what's great about on-chain data and systems like the TAI, of course, is that you don't have to take anybody's word for it. You can self-verify, which I think is the ethos of the community. And I know that our community of developers are really proud that Hedera has accomplished these performance metrics with 100% uptime over the last year. And so there are several other high performance networks that have gone down under lower volumes, and so it's something that we're quite excited about. I believe that these features, coupled with the high scalability, fixed and low transaction fees, so 100th of a cent, 0.0001 in HBAR, with no surge pricing, is what really makes it an ideal destination for DeFi. And similarly, why I think we've seen adoption from some of the world's largest corporations, such as Google, IBM, Dell, LG, Hitachi, Boeing, and many more. Firms that probably care that they're building on the most environmentally friendly protocol. But industry-leading TPS, or transactions per second, that's really just a number. And what does it mean? Speed means faster payments, better user experience. Verifiable transparency means trust. Global institutional-based governance leads to stability. So I'm really excited about what's being built on Hedera. I know that DeFi, in the DeFi space, we're only just scratching the surface.
In the DeFi space, we're only just scratching the surface, and he just confirmed for you guys, Greg Bell from the HBAR Foundation, that institutions and some of the largest organizations that in which and most likely utilize every single day, like Google, are focused on what? DeFi, people. Okay, I'm not making this stuff up. People think that I'm crazy for promoting and talking about how you should be paying attention to DeFi, but it is what these large institutions are paying attention to, and what everybody in the retail space is not. Everybody in the retail space is so fixated on immediate price appreciation of these digital assets when they're missing the ball. This recent price appreciation in these digital assets is nothing compared to what is going to happen over the next 3 to 5 years when these institutions not only get the regulatory green light on these digital assets, but get the regulatory green light to lend, to borrow, to stake, to aggregate yield, to provide liquidity. That is what is going to freaking scale these markets, because these institutions are 110% coming, and they're coming to DeFi hard. Okay. I'm telling you all right now, you got to tap in. So that was Hedera. Those are some of the developments that I just wanted to show you guys ongoing, right? We had some HBAR speakers. We had some TVL milestones hit on the Hedera network, which was phenomenal to see this past month. Now let's transition over to Stellar. We'll get into Stellar, then we'll get into Ripple, XRP, and then we'll get into Algo. Okay, I have back-to-back information for you guys. So Stellar developments, let's talk about it. Jenny Johnson, CEO of Franklin Templeton, recently stated, this is at an event that just took place, SALT event that just happened, I don't know, maybe 2 or 3 months ago. And she stated on stage that regulators will likely participate in DeFi through staking. How many people right now in the retail game go on and talk crap about DeFi on the internet? It's not regulated. Oh, it's never going to be regulated. But here you have an individual representative from Franklin Templeton, who definitely has more credentials than you, actually telling you guys the opposite. And when you go in and you watch this video breakdown on YouTube of Jenny Johnson saying this publicly, the video has like 200 views. Nobody's watching this stuff, okay, except for probably the CYPRX researchers and a handful of other people. This is a significant signal from a major financial institution, and it highlights DeFi's growing maturity and potential to integrate with traditional finance long term. That's the thing you need to understand. She wouldn't just risk her entire career and put this out to the general public and everybody watching her without backing it with confidence that this is going to happen. Stellar and their DeFi ecosystem, coincidentally enough, after Jenny Johnson openly said this as if she knows some type of inside information, surged to a record $61 million in TVL this past month, which again has a lot to do with why we've seen a significant increase of XLM's price action. Okay. So to answer the question at the beginning of this call, right, why are utility assets pumping like XLM, Algo, HBAR, XRP? We've literally seen increased TVL across each of these DeFi ecosystems, and it's only going to continue to scale from here. I'm not saying that there aren't headwinds that we don't need to be paying attention to and mindful of that could create a risk-off market sentiment in the short term, but DeFi and institutional adoption of DeFi is going to be a massive driver of the price appreciation of these assets and that we know and love and have been accumulating in terms of utility assets over the past consecutive couple of years that have never had access to a mature, well-built foundation in the DeFi ecosystem, okay? So Franklin Templeton, you already know that they leverage the Stellar blockchain. Put two and two together. DeFi is not going away. The institutional money is aware. Most retail and the general public have no idea the reason for price increases that I've shown you guys up to this point. Tap in and learn about DeFi. And learn about how you can get your digital assets working for you, generating you passive income, because these regulators, these financial institutions, these large organizations, they will be doing this. Take a second and listen to what Jenny Johnson has to say.
And so we had to run and build the capabilities there. And so we ended up building this huge infrastructure. We have now actually made the decision to outsource that recently because honestly, the service providers have now caught up on that. However, when you come into the digital asset space, when we were first looking to launch the tokenized money market fund, there weren't service providers out there. So we said, okay, we need to build this. And then as I mentioned earlier on staking, look, I think if you're going to be participating in this space, people are going to have to be staking. It's going to be part of how you're doing. I think regulators are going to end up staking because they're going to look at it and say, wow, this gives me unbelievable transparency into the transactions. If I need to regulate, the best way to do it would be to be staking on these platforms.
If I need to regulate, the best way that would be to be staking on these platforms. That is coming from Jenny Johnson from Franklin Templeton. Franklin Templeton, again, utilizes the Stellar blockchain. Put two and two together, people. You can't make this up. Like this is the type of stuff that these influencers in the mainstream will never show you because, again, they're so fixated on drawing some Fibonacci's on their screen and thinking that they actually matter when real institutions come into this space. These price projections that you're getting on the internet are completely irrelevant when you understand the power of DeFi. When you understand that it doesn't matter if XLM is trading at $1,000 or if it's trading at $1, it does not matter because in DeFi, you're going to be able to utilize your $1,000 XLM or your $100 XLM or your $1 XLM in the same exact way, and that is to earn passive income. Okay, man, you guys, people really got to tap in. So let's jump into some of these Stellar Development Foundation announcements. This is from November 25th, 2024, just to show you guys DeFi has been significantly surging across the board. On XRPL, Stellar, Hedera, Algo, Stellar DeFi TVL reaches a record 61 million amid XLM's 400% price increase in surge. Stellar, one of the oldest layer 1 chains with smart contract functionality, saw its total value locked to TVL and support decentralized applications, or DApps, hit a record 61 million on Sunday, November 24th, according to data from DeFi Llama, which again, you guys can go track yourselves. Stellar's TVL growth has been driven by its decentralized exchange, or DEXs, the main lending app and decentralized stablecoin project. And here again, it says its main lending application. What did you hear the Hedera representative say? That institutions are going to want to be doing what? Lending, borrowing, right? Okay, I'm just saying, you just heard Jenny Johnson mention staking, okay? All has to do about and with the DeFi ecosystem. Aquarius, Stellar has been one of the fastest growing DEX apps on Stellar, with its TVL gaining over 240% in the past week to a record 8.4 million. It hosts several pools, i.e. liquidity pools, containing XLM, Aqua, and its native token, and multiple stablecoins. Trading volume has also been on the rise. Other fast-growing DEXs, including Lumen Swap, the largest one with a record 23 million in TVL, has also Scopely, and SolarSwap. Hopefully I'm pronouncing those correctly. Lumen Swap daily trading volume soared to a record 27 million after they maintained below the 1 million for multiple months. So again, I'm just attempting to show you guys, to answer the question, why are utility assets surging in price? It's because the DeFi ecosystems across each of these platforms is significantly rising. Now, at the same time that all of this is happening, let me show you guys exactly what I'm talking about, that not a lot of people are paying attention. Stellar Development Foundation on their actual YouTube, check this out, posted a video on October 31st, 2024, labeled How Institutions Can Navigate the DeFi Landscape. This is from Meridian 2024. People, this has 224 views. 224 views. Think about it. Think about all the influencers out there that haven't seen this. Think about all the individuals that are actually invested in XLM that haven't seen this. They just hold XLM because they think it's going to go to some high price because some bullish moon boy on YouTube told them that. They're not actually looking at what's happening behind the scenes. This is an individual. His name's Guillotin. He is from Block Demon, and he openly confirms that institutions are here. Institutions have their hand in DeFi. Take a second and listen.
Time to be building.
But are there markets problems that DeFi can solve as well, Gaetan? Like liquidity, for example?
So actually, if I can, you were asking about advanced questions from institutions when it comes to DeFi, and it made me think of an example which is very recent. A large US asset managers came to Blockdaemon and asked questions about active set of public blockchains. I won't name names. Stellar was one of them. And the question about active set is fascinating to me because I think 3, 4, 5 years ago, I don't think these institutions were asking about, okay, what are the risk mitigation processes I should consider, if not even put in place, when I want to interact with blockchain, public chains. And now they're looking into the nitty-gritty of, okay, who are the operators? How are the block produced? What is the MEV practices on that chains? Really questions that seems really pointed and a lot more, again, advanced, to take the terms that you used, than what we could hear 2, 3 years ago. And I think it just reflects, as an industry, how now institutions are getting into not just dabbling into blockchain. And, you know, actually the question is not how institutions are adopting DeFi, it's how they navigate it, right? And now it's really about navigating it versus, are they touching it or not? They are. They're already interacting with it. And I find that this is...
Boom, right? So now you guys have heard it from an individual representative from an organization that provides institutional action or institutional access to staking solutions, okay? This information is not coming from CYPRX. I'm not just sitting here waking up in the morning like, oh, I'm going to go and tell everybody that institutions are coming. This is coming from large market participants. And again, this information being presented to you guys by these organizations like Stellar Development Foundation. Most of you guys invest in XLM, but nobody's watching this. This has 224 views. This is physical confirmation that institutions are here. They are interested in DeFi. So why on earth would anybody that holds XLM be like, oh, screw DeFi, I'm not going to get involved in DeFi, it's too risky, blah, 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 blah. Educate yourself, right? Push for your education. Understand that that is what the mainstream wants you to think. That's how the mainstream wants you to be. They want you to be stupid. They want you to be ignorant. They want you to lose and drop the ball on this massive wealth transformation. These institutions, you really think that they don't have back-end teams trying to figure out how to leverage their digital assets to earn yield? So should you. We now have equal access, the same access that these financial institutions have had in TradFi all of the entire existence to earn on their assets. We now have that equal access, okay? And they're literally painting a very clear picture that this is possible. Yet again, nobody's tapped into this info. Let me show you another example. Here's an individual rep, the CEO of Blockdaemon. By the way, for those of you all who don't know, here's Blockdaemon. Here's their website. Here you can see they provide institutional access to staking solutions. and institutions can come and they can earn yield on their digital assets. You see this, right? Right? I mean, XLR is right there. XRP is an option. XDC is an option. You got XLM as an option. Go through our website and just look through it, okay? And listen to what the individual representative from Blockdaemon here says. This is again from 1 month ago. The State of Staking Infrastructure European Blockchain Convention. This has 95 views. That means that you all watching this right now, this live, there's 1,300 people. You all are about to see this video more than actual people that have watched this video. Take a second and listen to how she confirms that one of the largest institutions is utilizing their solutions.
Hi, everyone. My name is Amor Sexton. I'm CEO of Blockdaemon. We're the world's largest infrastructure provider for Web3. We're really a gateway to Web3 with a wide variety of products and services that can meet the needs of any company that's looking to build on a blockchain or interact with the blockchain. I think from a staking perspective, we were one of the first ones in the market to do it. And what's exciting is to see the number of networks out there at the moment who are utilizing this methodology to secure their network. We're seeing the maturity of the technology as well, both the networks that have existed for a while who are maturing their own technology or the new entrants to the market. There's the NORS, the Node Operator Risk Standards Initiative, which we're very, very excited about, which is looking at really bringing in third-party certification for validator operators to ensure that validator operators are really meeting institutional needs when it comes to risk management, and that they can have that form of certification that would meet the standards of an enterprise due diligence. We are broader than staking, though. It is one of our products. So from a company perspective, we're really excited about some of the stuff that we're doing around our wallet technology as well. One of our products we're going to announce soon is being used by one of the world's largest financial institutions, live in production, which is very exciting for us. And then we're just continuing.
Boom, right? She just confirmed one of the world's largest financial institutions is utilizing their products, and Blockdaemon is literally, I mean, you can go and read about it on their website. I won't beat a dead horse, but they literally provide staking solutions to large institutions. So you can see that this is not some hoax. This is not some rug pull, okay? Anybody that tells you that DeFi is a rug pull is absolutely illiterate and uneducated. Bypass them and push through that blockade of individuals that are trying to stop you from experiencing life-changing wealth, and tap into DeFi. Tap in how you can, in the now, utilize your digital assets to make you passive income. And then after this next bull market cycle, this massive blow off, whatever we're expecting, how you can keep and maintain your wealth in the digital realm of things, okay, through the utilization of DeFi. Moving on. So we've now covered Hedera. We covered XLM Stellar. Now let's talk about XRP. Okay, XRPL. Wow, this has been phenomenal. Aerodrome announced this in November. And again, I'm just trying to fixate your attention on some of the most immediate developments that have unfolded, because again, to relay back to the average retail herd, most people have no freaking idea why prices are surging right now. They think that the utility bull run is here and that these assets are actually being utilized by these institutions for cross-border payments and all that, whatever. That's not happening yet. It's going to happen in the near future, don't get me wrong, but one of the many reasons why we're seeing an increase in the price of these digital assets, particularly utility coins, XLM, Algo, HBAR, XRP, ADA, is because of the increase in TVL in the DeFi ecosystem. And I'm trying to physically show you guys that. All right. So this past month, XRP liquidity pools dropped on Aerodrome, which was phenomenal to see. We tested these out in the Wealth 28 Club. They work phenomenally well, albeit they don't meet our risk requirement for our portfolio to see a surpassing 500,000 in TVL. I don't know if it's surpassed that. I haven't checked in a couple of days. But to meet our minimum threshold before we get involved in a liquidity position, it needs to meet a threshold of at least $500,000 in TVL locked. I'm not too entirely sure if this trading pair did that, but still, this was cool to see. Again, on the base platform, Aerodrome, that we are able to take our XRP and utilize it to provide liquidity to earn trading fees. So thanks to Universal Asset, UXRP is now paired with Wrapped ETH, and it was available for LPs, liquidity providers, with Aero incentives already flowing. Aerodrome aims to provide the best on-chain pool for UXRP liquidity provider rewards and trade execution. So that was really cool to see mid-November. Now, interestingly enough, what I find, again, I try to put two and two together. Come over to Rahul Advani's LinkedIn profile. Okay, this is from a week ago. If you guys don't know who Rahul Advani is, go check him out. Again, individual at Ripple, lead position in Ripple. Okay, he posted down here, one of the Bank of International Settlement documents that came out in November. BIS published a paper examining the role of participants in providing liquidity on DEXs. You can't make this stuff up. And literally in this BIS document from November 2024, okay, if you type in Command F and you type in, I don't know, let's type in passive, right? Right down here, it says, part of the reason for AMM's growing popularity is the potential to earn passive income as a liquidity provider. Then if you type in strategies, right, this document, what does it talk about? It talks about building DeFi strategies, liquidity provision strategies, and modern AMMs, right? You guys see that, okay? And again, who posted this? The important part is this was posted by Rahul Advani. So he's definitely 110% tapped into what's happening. You got the BIS now putting out documents discussing and conversating about strategies that you could partake in the DeFi ecosystem to earn passive income. And at the same exact time, Rahul Advani is putting this information out on his LinkedIn profile. You see liquidity providing rewards as incentives coming for XRP holders consistently, right? Now, if that's not crazy enough, check this out. In November as well, what else played out? Ripple partners and launches 3.8 billion tokenized fund on the XRPL. This is from November 25th, 2024. This is going to really blow your mind and prove to you guys that institutions are definitely tapped in. So let's check this out. Ripple in collaboration with Archax and Aberdeen. Now, I guarantee you, you've probably seen an influencer talk about this. You've probably seen an influencer say how massively bullish this is for XRP and blah, 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 blah. But they didn't tell you. What they did not tell you is how this has to do with DeFi. Look at this. Aberdeen has launched the first ever tokenized money market fund on the XRPL. The UK-based FCA-registered digital asset platform Archax also provides access to Aberdeen's $3.8 billion US liquidity fund in tokenized form. It moves things another step forward for both real-world asset tokenization and institutional-grade DeFi on the XRPL. I highlighted that in green. That's going to play an important role in just a second. Because down here, it mentions Marcus Infinger. Marcus Infinger, on behalf of RippleX, referred to how the blockchain continues to help improve operational efficiencies and keep building the leading positions in real-world asset tokenization on the XRPL. So we're seeing Rahul Advani post documents from the BIS talking about decentralized exchanges and AMMs and providing liquidity in liquidity pools and earning passive income. I just showed you guys how Aerodrome just recently launched a new liquidity pool that you can go and utilize your XRP in to earn rewards. And Marcus Infinger was also mentioned in this report from the 25th of November. Well, do you guys remember? I shared this with you all back from October 30th, 2024. Marcus Infinger wrote this on CoinDesk. You can see right here, it says, by Marcus Infinger, how public blockchains will catalyze institutional DeFi adoption. I'm going to read two highlights from this because you can see here he mentions leading firms such as BlackRock and Franklin Templeton. I just played a video clip of Franklin Templeton CEO Jenny Johnson mentioning that regulators are going to be utilizing DeFi through staking, right? Are already embracing public blockchains by bringing regulated traditional financial assets like tokenized money market funds onto public blockchains, which is already leading to significant capital flows into DeFi, right? You see that right there. And over the next 5 years, given a long-term projection, we should also expect to see additional financial assets such as private equity to move on chain, further accelerating institutional adoption. For investors, these tokenized assets represent low risk, high quality liquidity with lower barriers to entry and better availability, making them an attractive option that brings more stability to blockchain-based markets, ultimately supporting broader adoption for DeFi. This is again being written out by Marcus Infinger from Ripple. This is now twice he's mentioned in the same report, DeFi. And last but not least, he goes on to say right down here, check this out. This is where we're going to drop the ball. As public blockchains offer a path to a more productive financial system, the question is no longer whether institutions will adopt them, but how quickly this transformation will unfold. One thing is clear. This shift is not just redefining finance, it is laying the groundwork for DeFi to become a fundamental part of the global financial markets. So how many individuals that hold XRP that knock DeFi and say it's a scam or that you shouldn't get involved have more credentials than Marcus Infinger, whom works at Ripple? Probably nobody. Probably nobody on Twitter that tells you that DeFi is a scam or that you shouldn't get involved or that you shouldn't educate yourself on DeFi has more credentials than Marcus Infinger himself. Therefore, Marcus Infinger is literally telling you here in this article, DeFi is set to become a fundamental part of the global financial markets. If you hold XRP, do research on DeFi. Do research on how you can get your digital assets working for you because it will be the future. It will become the normal. And if you don't, again, I have a theory that individuals that don't will end up being manipulated to sell for fiat currency, sell your XRP for fiat currency, and get stuck back in the traditional system and get priced the F out of these markets. Okay. Figure out how you never have to sell your XRP. Don't matter if it's $1,000 or $100 in the future. If you know how to utilize your XRP in the DeFi ecosystem, it doesn't matter what price it's trading at. You will be able to make money with your XRP and pay yourself passively without having to sell your XRP. Okay. I'm just saying, again, tap in. Moving on. So we covered Hedera, we covered Stellar, we covered XRPL. Now let's get into Algo. These are the last 3 slides I have for you guys. If you're watching this as a recording, smash that thumbs up button, subscribe. If you're on the live with me right now, many blessings to you guys. Really do appreciate you all for tapping in. I see that we have some Wealth 28 Club members actively live in the chat. So blessings to you guys for tapping in. Tell these people that are listening in to get tapped in with the Wealth 28 Club. Let them know in the chat how monumental it is and how much they're going to learn once they come into the Wealth 28 Club, and that they should take advantage of their education now while it matters. Because 3, 4, 5 years from now, you don't want to be looking back saying, dang, I wish I got educated on DeFi. You want to be doing that and going through that process now. Head over to CYPRXtrading.com. Come tap in with us. We'd love to have you on the team. We got some holiday discounts running that'll help you guys out on your first month subscription. Utilize that to your advantage and come tap in with us. Moving on, Algo just posted about some different DeFi developments. First, I liked this one. This is from the Algo Foundation. It just goes over a long list of all the things that they've accomplished. There's a UNDP partnership here, staking rewards incoming. You guys can see that, right? Jenny Johnson was just talking about staking via regulators. Coinbase 50DEX index member. 30% of all electric bills in Afghanistan paid by this organization, Hazab Pay, which I'm assuming is built on Algorand. DREC Alliance Foundation member this month. Brave Algorand takeover for their 70+ million users. They joined the decentralized ID organization. TravelX doing more transactions every month than the entire L1 blockchains, which is phenomenal to see. And they had an integration with this organization titled Nainsen. Excuse me. And they said at the bottom of this is just the beginning. So that was really cool to see. I personally hold a very fat bag of Algo, and it was cool just to see a long list of developments that took place, you know, give or take over the past consecutive couple of weeks / months. Moving on, fixating our attention more so on DeFi. November 29th, 2024, Folks Finance hits a record 255 million TVL boosted by the Algorand ecosystem. Folks Finance, a cross-chain lending platform, saw its total value locked in TVL reaching a new record high of 255 million after soaring over 200% in November. According to the data from DeFi Llama, Folks itself reports over 257 million in TVL. And it says here, Folks Finance offers a series of products associated with Algorand's ecosystem, including its Folks Finance lending and lending platform for Algorand-based assets, Algo liquidity governance, and applications that allow Algo holders to commit their tokens to governance while receiving a derivative token to be used in DeFi. Algo liquid staking, a liquid staking solution for Algo holders. Again, if you don't know what Folks Finance is, tap in. We talk about it on the weekly Zoom calls with the Wealth 28 Club members and how they can participate on that platform if they choose to do so and accept the risk. Moving on, Comps TVL surges to a record 4.5 million, fueled by a XUSD CDP launch. Comps, a DeFi project on Algorand, or CompX, a DeFi project on Algorand, experienced rapid growth of total value locked, a metric after the launches of its collateral debt position CDP product. CompX's TVL increased over 900% within the last 48 hours to a record 4.5 million as per DeFi Llama. CompX has operated as a yield farming product since February of this year. So again, showing you guys that this is all happening for the first time ever on these utility-driven assets that we've had and been holding in our cold storage wallet. Just think about it, how you've been manipulated over the past, let's just say 2 to 3 years since the bear market started, right? FTX collapse, lack of regulatory clarity, Gary Gensler in the United States thinking everything's a security. You have literally been manipulated into being fearful of deploying your assets in a DeFi because you've been psyoped into thinking that hodling in your cold storage wallet is the key to success in these markets. That is not the case. I'm here to reverberate your restructure your mindset into thinking, okay, I have these digital assets. Again, they are called digital assets for a reason, because you can take them and utilize them in DeFi to earn you passive income. Now, obviously, of course, there are strategies that you can build around this. There's risk mitigation tactics that you can partake in, and there's other things that you can partake in the DeFi ecosystem to mitigate things like impermanent loss and whatnot. you have to take a mature strategical approach. You can't just come in, think you know it all, and think you're going to start making passive income by jumping on a DEX and putting your liquidity to work. That's not how it works. Just like in trading, just like when you're buying crypto, there's a learning process. But again, that's why we built the Wealth 28 Club, so that way you guys have a trustworthy source of information where you don't have to go out, search all over the web for active sources and information. And it's built for you guys in a way that takes you from A to Z to understand all of this stuff properly. So with that being said, hopefully you guys have now seen that the reason why we've seen a surge in utility prices across the board is because of the TVL that has significantly increased over the consecutive past couple of weeks on these networks. And it's going to continue over the consecutive course of the next, I'd say, maybe 3 to 5 years significantly. I mean, you're going to see the TVL and the DeFi ecosystem alone on these three net. I personally don't hold any ADA, so that's out of my spectrum right now. But XLM, Algo, HBAR, XRP, I can 110% say with confidence that once these institutions come in and they also get the green regulatory light on DeFi, oh my goodness gracious, it's gonna be very interesting to live through. That's all I'm gonna say. So many blessings to you guys. Hopefully you all enjoyed this video breakdown. If you did, smash that thumbs up button and subscribe if you're recording. And again, if you're listening to this live, we'd love to have you on the team. Come out, tap into the Wealth 28 Club with us. And with that being said, I'll see you all in the next video breakdown. By the way, before we get off here, might as well throw this out there real quick, okay? Check this out, guys and gals. CYPRX Research Labs, they're over here grinding away. I mean, grinding away hardcore. In the past 2 months, they've grown their platform on X to almost 600 followers. So if you don't follow the CYPRX Research Labs on the X space, go check them out at CYPRX Research. All non-biased, non-opinionated information, just straight documents, straight research. I'm talking about documents from the largest organizations that you're never going to see, insights from some of these large organizations that are never going to reach the mainstream. Again, go tap in, give them a follow if you're here listening to this live. Let's try to beef them up to at least 600 followers by the end of this year. Many blessings to you guys. As always, be cognizant, be aware out there, and I will see you all in the next video breakdown.